Hey everybody, welcome back. So here we are today, and we're starting an exciting new series that Josh and I, after working together for many years, have realized that there's some common mistakes that buyers make when they're purchasing their home. And some of them are related to mortgages, some of them are related to the type of property they actually buy, and the sort of missteps with using or not using a realtor. To start the series off, though, we're going to talk about mortgage mistakes. Josh, welcome. Can you fill us in on, what are some of the typical mistakes that a home buyer makes when they're buying their home and choosing a mortgage?
Absolutely, Jay. There's a couple common mistakes that I'm going to focus on here today. There, of course, are many other smaller mistakes, things that I can help make sure that my customers and those who work with both of us will share. But, one of them is actually not having a real proper pre-approval. I call it fake pre-approval here. Many people will come to me saying, yeah, I checked on RBC's website and I took this screenshot here from them. They say, oh, I can qualify for a certain amount of money. But you know what? Those pre-approval numbers, pre-qualification numbers that you get from those websites are only as good as the information that you gave that calculator. Like anything, if you don't know what you're supposed to say, then the answers you're going to get on the other side aren't going to reflect reality. I was helping a younger mortgage agent who's kind of new at this recently on something, and she didn't even think to ask her client if he had any child support or spousal support payments. Well, having not asked that, and then we found out later when questioning one of the deposits into the bank account when we were checking for the down payment, only to find out that it was a reimbursement for overpayment of child support. Well, now we had to include child support in the numbers, and he had over $1,000 a month in payment there. And that changed the number. Thankfully, he had a co-signer that was pretty strong and it worked out, but you never know, right? You want to make sure that you're asking the right questions. So when we do a proper pre-approval, we're asking those questions, even the ones that are awkward. We're taking a look at documentation, making sure that the income, the credit, the down payment are all rock solid. We can do that initial pre-qualification pretty quick, but before you go looking at houses and falling in love with them, you want to make sure that your pre-approval number is solid, and that when you do find a home, I can give you that pre-approval letter. And Jay, you've often told me how necessary that can be in certain negotiations. I can give that to you with confidence, and we can go ahead and finish up your mortgage there. Now, the second one I want to talk about are the penalties. If you just go to your bank, you're not going to really be aware of how the mortgage from BMO or CIBC or TD is going to be different from those offered by me as a broker, or even from each other, the different banks. They're all a little bit different. And so if you have a broker who really understands the differences, and bank penalties is just one of the many areas that we know is different with mortgages from your banks. They can be 3 or 4 or 5 times larger at the bank than some of our non-bank lenders. You want to make sure you're getting proper advice from your mortgage broker, that you're going to the right lender, you're choosing the right term, especially in 2024 here as we're entering into a decreasing rate environment. You want to make sure that we're watching out for you, not just today, what's best for you in the next 3, 6, or 12 months, but what's going to be best for you over the next 3 to 5 years as you have that mortgage. We know most mortgages last about 4 years before something happens and we need to change them up. So we want to make sure that you're prepared for that, and it's not going to cost you a pretty penny because you weren't making the right choices right there at the beginning. So that's just, Jay, 2 examples of things that, or mistakes that people make with respect to mortgages, that as a mortgage broker, it's my job to understand that those mistakes are so easy to make, and to show you around and navigate around making those mistakes so that they don't cost you surprising amounts of money later on.
Yeah. And we see this all the time because we have buyers coming to us that think they have a good approval. And then when we get down to the brass tacks and trying to get this thing funded, it doesn't happen. And now they're disappointed. The house that they thought that they could buy, they can't. And then they're never really truly satisfied with what they can buy. So I absolutely agree with this. Pre-approval must be done, and it must be done correctly. It's also very interesting when 3 to 5 years from now, statistically, you're going to call me up. You're going to ask me to help you sell your house, and you're going to be surprised at what it costs you to exit out your mortgage because, maybe the main decision factor you made was just about the interest rate, and you didn't realize what it was going to cost you to carry your mortgage or to potentially sell it early, exit out of this mortgage quick. So both of these things are absolutely important to follow and to make sure that we do this correctly.
Awesome. Like always, everybody, we're bringing you new content here every single Wednesday. If you appreciate or like what we're sharing with you, please hit the bell there on YouTube, like the video, and subscribe to our channel. We'll keep you posted every week with new fresh content.